Navigating the current real estate market. We are deep into 2024 and there's lots going on. So, are you considering buying a home this year? And are you wondering, what do all these things have to do with me? And how am I going to be able to buy a house so I can increase my wealth, start building wealth for my family? So, you first time home buyers out there, you got to hang in there. We're going to cover a lot of ground today. We're going to talk about affordability. We're going to talk about rates. We're going to talk about tips and information for home buyers and investors both. So both home buyers and investors can, benefit from what we've got going on today. Affordability is at an all-time low. This means that less people can buy homes in today's market. Why? Well, we're going to go over that. We're going to go over that and how to overcome it and how to make sure some tips at the end. We're going to be talking about some tips for home buyers in this seller's market, how you can stand out, because there's less inventory, there's less buyers. However, there's still more buyers than sellers. Yes, it's an equilibrium I haven't seen in my 28-year career. I've been lending since 1995. I've been a mortgage loan officer, still am a mortgage loan officer here in Texas. So we're going to start with that. We're going to start with Texas because did you know we're the #2 market where people are moving from around the country? So here's some quick stats for you. Texas as a whole, I'm looking at line 2 here on the screen on this graph. Texas median home prices from February to March, it takes a couple months for data to come out. So we're in June right now, but home prices aren't going down that much. I mean, those of you waiting for a crash, I don't know. I don't think it's going to happen. I mean, sure, things might stabilize and be a little bit in getting an equilibrium, but I don't buy this big crash that's coming because I think a lot of people want to cash in on the American dream. They want to cash in on owning a home that appreciates in value so that they can build wealth. Real estate is the all-time best investment of all time. So where are we right now? We've got affordability at an all-time low. Rates are the highest that they've been in 25 years. I've done this almost 29 years, and I saw rates like this at the end of the millennium in the 99, 2000-ish. I saw rates like this. We're going to go over moving stats. We're going to go over cost of price of homes and some things that you can do to get those costs down. The first thing we're going to talk about, and don't forget I'd love to see your questions, guys, as I'm talking about things. Please let me hear from you. I'd love to. We're streaming on all platforms today, so this will be fun. So let's see. Overall, we're going to go back to some of the stats, okay? So overall, in the whole USA, CoreLogic, well, actually, we're doing Texas again. We're doing Texas? Let's see. I'm going on the screen. Okay, home sales volume. So we're going back to Texas. That's where I live. And that's actually a big indicator of what's going on around the country. So Texas as a whole, we saw before that the price is going down just 0.1%, which is really small. The volume has gone down a little bit, down from February to March, -7%. So we are seeing a little bit less volume, but things are still happening, guys. Now, rolling forward to the summer, what I'm personally seeing in, again, most of my business is in Texas. I do lend in 38 other states, but we're seeing still lots of people applying, lots of people that want to make application. So if you're one of those people, that's why you're tuning in. I appreciate you tuning in today. How does that compare with the USA? So in the USA, CoreLogic is a major data bank, and they've got lots of cool numbers. They predict that month to month, this is nationwide, the home prices will increase 0.8%. Now, I know that doesn't sound like a lot, but when you compound that and do annual, that's like a 3.4% annual appreciation. Again, it doesn't sound like much, but let's look at the numbers. Like if you have a house of $400,000, let's say your house price value is $400,000. A 3.4% increase in that 1 year is equivalent to over $13,000. Now, I don't know about you, but I've never seen a landlord, if you're renting, give you at the end of the year actually $13,600 is 3.4% of 400,000. So that is why, friends, that is why appreciation in homes is a reason to purchase houses. So even a 3.4% increase, which sounds kind of modest, but it's good. It's actually good. Now, some markets around the country, little pockets of markets, they might appreciate at a higher value, but we're talking about averages here. 13,600 isn't bad for 400,000. And then next year it'll be a little bit more, because 3.4%, if that's the appreciation at the time, will be of, instead of 400,000, it'll be of 414,000, right? Because it increases every year. Now, you're probably wondering about affordability. Like, okay, Jen, appreciation's all nice and all, but what about, again, here's the graph, guys, about appreciation or affordability is at historic lows. So I know what you're feeling. I mean, the houses that I hear it every day, that the houses that people want to go to, they cannot afford. We have many clients that have to put things on hold because they cannot get into the price range that they need for their family. In fact, recently we had a single mom, and she's like, I've got to get my kids in a better neighborhood. I've got to get in a better area for my kids. I don't have anyone else around. It's just me and my 3 kids. And where she wanted her kids to go to school, based on a safer place to live, she couldn't afford it. She could not afford it. So we tried to get her a co-signer. Can you get a co-signer, a family member? Now, there are some ideas. We are going to actually talk in a few minutes about buying down the interest rate. That is a way that you can get the interest rate down. So we were able to get this lady into a house, actually, because she was able to find a family member that was able to co-sign, but it was difficult. I mean, it was hard. And so I hear you. I feel your pain. It is a real thing. So affordability, home prices are climbing. There's inflation, cost of milk and cost of bread, like simple things. The cost of things is higher. And the stats also show employment, people that are employed, the wages are not rising fast enough, meaning the prices of goods are coming up here. Are you making, percentage-wise, are you making more to cover that percent increase in prices? The answer is no. So I don't have all the answers of where we go from here. I can just tell you that I watch a lot of data. I will keep releasing it on the channel. So on social media, on YouTube, I keep releasing relevant data whenever I get it, so that you can make informed decisions, real facts, no BS, about home buying. Whether it's this year, next year, I'm always going to be releasing the data. So let's see, interest rates. So I get this every day. Hey, Jen, when are rates going to change? When are they going to start going down? So the last time that the rates went down was actually last July. And recently, we had in December, we had a little bit of a chairman of the Federal Reserve Fund was like, yeah, we're going to anticipate some decreases in 2024. Well, that has not happened yet. In fact, this last Federal Open Market Committee meeting on May 1st, we can put that back on the screen. They decided to hold steady. They decided to not increase or decrease the federal funds rate, which the federal funds rate isn't exactly mortgage rates, but they're they're influenced. So when the Fed is lowering that short-term federal overnight funds rate, which is what that is, other things follow. It influences your credit card interest rates. Lots of credit card debt right now. Credit card debt is at an all-time high. So the credit companies are cashing in on higher rates. It would be great if those would go down. Car loans are higher percentage-wise to finance, and also mortgages. Mortgages are pulled in there as well. So when the Federal Reserve starts to decrease these rates, it will influence and seep over into other things because things will cost less money. So, there's a quote, actually, Jerome Powell said in one of the meetings, I think it was this last one, he says, reducing policy too soon could result in a reversal of the progress we've seen. So what that translates to is they're holding off because they've seen inflation come down, but then, here a couple of months ago in December, it was down and they were like, okay, I think it's time. And then a couple of months later in February and March, we saw inflation creep just a couple little percent, a little bit higher, which is the wrong direction. And so what he's saying is, if we decrease too soon, now the graph I'm putting on here this was a year ago data, like, hey, we were increasing. Now we've been really flat since last July. You can see to the right of the bar that we haven't done anything. We've just been in a wait and see mode. And that hasn't been working fast enough. So that's why the Fed is really holding back and saying, look, if we go too quickly, what's going to happen is, and this is my prediction, is that when interest rates really do start to come down, people are going to come out of the woodwork like ants going after these properties. And I think that sellers are finally going to go, oh my gosh, we have a sigh of relief. We really need to move, but we've been holding on to our super low interest rate. And so that's what Jerome Powell means, is he's like, listen, inflation could happen all over again if we are not careful and make sure that it's the right time to lower these interest rates. So I don't know what's going to happen. Comment if you've got any questions about this, about rates, about how they're determined, anything. I'd love to hear from you. So it's anticipated that in one of the next Federal Open Market Committee meetings in September, there's a 69.6% chance. That's from a group called the CME group. So everyone's got their own prediction, right? Oh, there's an 80% chance. There's a, that's not the right slide. Oops, blooper. There you go. Wrong slide. There's a 69% chance, according to CME Group and the data that they've done, that the interest rates will be, we've got this nice little graph here. Everyone's got their own prediction, but 69% chance at the next federal meeting. So that's pretty high. It was higher before, and then it's come down a little bit. So we're just hoping for a decrease, because I've even heard people say, I watch lots of reports online and watch different things when all these meetings happen. Everyone's got their own opinion. Some people, there is a group of people that actually predict and think that they might have a slight bump up to control the inflation a little bit more. That's why they raise the rates, is to influence people to stop spending money. But people aren't stopping to spend money. That's what's actually happening. So we're talking about how to navigate this real estate market. So what I'd like to get into is questions and actually comments to help you understand how you can navigate this market. People have to move, y'all. People are having babies. They need more room. They're downsizing. They're getting married. I mean, they're relocating from out of town, from one town to another. I know that really well because we live in Texas. I live in Texas, and lots of people coming from other places coming to the state that has 8-ish% less cost to live than other states. And we don't have property tax. That's why it's so popular here. So people have to move. People have to move, y'all. So what can you do? So you can buy down points. You can buy down your mortgage with points, is what it's called, which is basically prepaid interest. Like, hey, give me a chunk of money and I'll give you a lower rate. That's what buying down points means. So get yourself a great realtor, because a realtor can help you negotiate with a seller to give you a credit and closing costs to help you pay for that. That's one way to do it, or you can pay for it yourself. But getting a closing cost credit can really alleviate some of that cost to buy down your interest rate to make your payment more affordable. So on the seller's closing costs, look for homes that are over 60 days old, that are on the market less than 60 days. Like if the house is on the market for 1 day, and those realtors that are out there watching, I'd love to know what you think, but the houses that are on the market for 1 or 2 days, I don't know. Can you go in and ask for 10 grand to closing costs? It might be hard, because it's pretty much a seller's market right now in a lot of places. I know some places it's not. But consider looking at homes if you are making sure that you want to increase your chances of getting a seller credit to offset closing costs. Get a great realtor on your side. Look for houses that are over 60 days old-ish, and your chances might be higher, okay? The other thing you can do is buy a smaller home. There's actually stats, there's stats that people want smaller homes because of this affordability. It's causing people to go to more minimal spaces. Do we really need this much room? Price per square foot. Let's just buy a less house, especially if you're a first-time home buyer. This isn't going to be the house that you're going to live in the rest of your life. I mean, you are going to, you're going to move at some point in the future. So for your first house, start off small, maybe change, expand the scope of the neighborhood that you're wanting to go to. And that's another tip, is that maybe you might have to increase your drive just a little bit. Maybe you have to carpool with someone so you can live a little bit farther out. Houses that are usually on the outskirts of a metro area, more and a little bit more remote, are usually less. And so that might be some of the criteria that you can look at. We mentioned realtors. Now, you don't have to use a realtor to buy a house. It's suggested because realtors know what they're doing. Especially if it's your first home, guess how much experience you have? 0. So a great realtor on your side can mean the world of difference. They know how to negotiate. They know how to look at data. They know how to say, hey, yeah, this could fly. Like, you're not overpaying. You can ask for these closing cost credits. So a great realtor is really going to help you out for sure. The other thing you could do, lastly, always be working on your credit. Now, this is a super hot topic. I always get a lot of questions about this. Credit. Maybe right now, we actually had someone last week that they had to buy. They don't have a lot of time to fix their credit. They're relocating and they have to buy. And credit wasn't that great. They're newer here in the country. They haven't been here a long time. And so they just haven't had the credit depth. And their credit score, their interest rate, because of their credit score, I mean, their credit score was okay. It was 698, and this is on a conventional loan. But their credit score, their interest rate was like 0.5% higher because they weren't in the most excellent category. So, they paid a little bit more. So work on that credit score. Make sure to keep following me, because whether it's shorts or reels or my longer YouTube videos on YouTube, I have lots of information about credit. And how to lower your score. Or increase your score. Increase your credit score. And it's all in those credit cards, y'all. It's your credit card balances. My pro tip, just to give you the most important tip about credit, is keeping the balances below 30% of the high credit. That's it. And don't have more than 2 or 3 credit cards. Like, that's my pro tip. It's really that simple. So watch out on those credit cards. Okay. Now, for you investors out there, you're like, hey, I'm not a first-time buyer. I'm an investor, or I want to be an investor. Lots of people want that passive income that comes from rental property, having someone else pay the mortgage while your house is appreciating and going up in value. Okay, so you could be a current homeowner and you want to have 1 or 2 rentals to just take the edge off and have some extra income and start to build that nest egg or nest eggs portfolio for some future passive income. It's real estate is a great way to do that. So first thing you can do is, if you are a first-time buyer, I think they're coining it on social media. I think I've seen it in a few reels, the house hack. And I was like, what is that? So house hacking is where you buy your first property and you buy a multifamily up to 4 units. You can get an FHA loan on that and still do a 3.5% down payment. So there's only one time you can do that really, and that's when you buy your first place. I mean, you can on your second and third. It gets a little more complicated, but consider buying a multi-unit that's 2, 3, 4 units, live in one of them, and then rent out the other couple of units. And the math might work to where it helps pay your mortgage. That's awesome. The other is to buy a home. You can put, as a first-time buyer on conventional, you can put 3% down. Second time in more, 5% down. So you still can put a low down payment as a multiple time home buyer. It doesn't have to be 20%. That's a myth, y'all. So you can put as little as 5% down as long as you qualify for the mortgage. And you can live there for a year and then go to the next house and leave that one behind and rent it out. Now that's actually really important to know that on a conventional loan, if you're going to that second or third house and you're doing a conventional loan, you can count the rental income on the property that you're leaving behind. We call it departing residence. You can use the market rent to offset that payment as long as you have it leased out, a lease agreement, and a first month's rent deposit before closing. Now, if you're going to an FHA loan on that next house, you're not able to use departing residence. So that's why you just, instead of me reciting and you memorizing a bunch of guidelines, just call me, text me, DM me, whatever. Loanwithjen.com is my website. You can reach me and I'll give you those exact guidelines of how it pertains to you. But it's not always as straightforward. So just make sure you talk to a lender as soon as possible to know what does and doesn't apply to you. But that's a great way to accumulate property for you investors out there, is be in one house for a year and then go to the next one and then leave that one behind and say, don't leave it behind, like not pay it and leave it behind, but you know what I mean? Like leave it physically and have rent to help you cover that mortgage. Okay, that's something that you can do. So a lot of people, you're probably like, hey, Jen, okay, this all sounds super good, but the rates, the affordability, the values, how do we know? How do we know that things are going to go down? Well, you don't. But there's data and there's lots of predictions and there's also historical, ebbs and flows. I've done this for 29 years and I've seen the ebbs and flows. So it will go down again. The economy just cannot function with rates this high for a long, long, long time. But there is relief out there. And I think it's going to happen when rates do come down even just a little bit, y'all. The inventory is going to open up. In fact, there's a quick chart that I'm going to show that just is some interesting data. And you can see that like 3/4 of the chart, people have below 4%. So the area to the right, that's kind of the dark orange, the people that have less than 3%, they are not moving. That's about 1/4 of the economy has less than 3% in a mortgage. And there's almost half of the people that have below 4%. So that's a lot of people, y'all. And when these rates start to come down, it's going to be easier for them to justify moving, to open up some of the inventory for you buyers to buy. And hopefully that'll even out the market dynamics between buyers and sellers. Now, the last pro tip that I'm going to give you, we are in a seller's market right now. And I think that when rates come down, it's going to continue to be that way. So I've got just some quick power tips on negotiating and trying to get the best deal for yourself. And that is use a realtor. Please use a realtor. Don't go in it on yourself. They're going to help you negotiate. Also consider things like offering a little bit more earnest money or waiving an option period or having your super strong financing, making sure that your lender is communicating and letting the seller's agent know, like, hey, this person is really pre-qualified. Like, they are really pre-approved. We have seen all their docs. Expect to give all your documents and be thorough with the lenders that are pre-approving you. And you're going to be in the right hands. So keep watching for tips. Please subscribe. Please keep tuning in. Didn't have a lot of questions today, but DM me. I'd love to hear from you. And we're here anytime. And I'll keep tuning in and keep you guys posted on what's going on in the future coming months. Talk to you soon.